Okay. I can't believe it's November 2020. It's been a while now since I've talked to my dear friend Martin, but we've come up with a subject that we think should be of interest to a number of people. It's about getting the basics right. Lovely to see you, Martin.
And you, James. Nice to see you again after this time. Yeah, it's great.
So just a reminder of who we are. I'm originally a finance professional, worked in HR for a while and then worked in internal audit. And for the last 10 years now, I've been doing training and consulting. Martin, tell us about who you are.
Yeah, I've worked in audit and risk for virtually all my career. I originally trained as a company secretary. I spent a lot of my career in Lloyd's TSB, but for many, many years I've been involved in training and developing people, not just in audit and risk skills, but also governance and fraud. So I'm really delighted to talk to James today. Thank you. Welcome to you all.
So let me just briefly talk about what we're going to talk about. Martin's going to explain who we think this video will be interesting for. And we'll talk about this subject, which is all about managing risk and keeping things under control. We'll talk about how do you get the basics right. And Martin and I have got a lot of experience, but obviously some of the things that can go wrong. And we want to give you all, and this is the background to this video, an idea of how things can kind of slip between your fingers. That would be a key thing that we're hoping people will get from this video. Martin.
Okay, thanks, James. So in many ways, anyone could be interested in this video, whether you are working in a small business or large business, whether you have to be a manager there or someone who's an employee. This whole subject is of great awareness. So what we try to do is develop this video, which will be appropriate for a very small business or operation, also a very large one. So if you happen to work with or you are a board member, this will be really interesting for you to get a sort of a wider picture. But also all of us obviously are customers and could well be suppliers. And for us all and for all of us, this topic is very relevant. If you look outside a business, there's obviously stakeholders and shareholders who've got an interest in the way that particular operation runs. So really what we're trying to cover in this short video is something that will be relevant to every type of operation and any participant in that operation. So that's what we're trying to do, I think, James, isn't it?
And Martin, you mentioned to me, you and I have obviously done a lot of training. You've done a lot more than me. Just kind of highlight why, even if you're a professional in compliance or risk, this might be interesting.
Because really the focus, and often we're stretched to look at strategic things, and whatever professional you are, you're looking things with a wider interest, whether it's strategy, governance, and other ways of doing things. But often the detail is missed, and we always believe people understand the detail and the basics very well. But in my experience, as you get more senior and you get more developed, one tends to forget what one learned years ago. So I think reinforcement of the basics is really important for everyone, James.
Yeah, I think this idea that, you know, we're going to implement this would be a kind of classic phrase. And the issue that we're trying to look at here is, well, what does that actually mean in practice? And what difference does it make?
I think you're right. And also, I think there's a learning from all this as well. Once something's been implemented, what have we learned? What we've done well, what we haven't done well. And I think that's really, really important.
Brilliant. So you're going to quickly talk to us about the way risk and could be defined.
Okay. So on one side, obviously, is what can go wrong, and that's what everyone believes is really a key risk. So what can happen? What sort of tragedies can happen? What mistakes can we make? And so always there's a perception is that this is a risk of a mistake going wrong, or a disaster or a tragedy. But the other side of the spectrum is things that aren't managed that well, where, for example, there's various projects, you can talk about Crossrail and other things, where it's a failing to do things that resulted in a failing to deliver something, or a difficulty where something's happened. So really there's two sides of it, and both sides really need to be thought about and managed effectively, but there's different things to think about, obviously, in both sides of the examples we've given them.
And literally we could spend, we were talking about this earlier, hours talking about the basic things that can go wrong, health and safety issues, whatever, but equally the countless numbers of things where businesses have tried to reach certain goals and unfortunately failed to do that. So when we have this conversation about risk management and keeping things under control, we very much have a kind of business hat on as well as a kind of compliance hat.
I agree. That's absolutely right, James.
And obviously in the context of 2020, you can't talk about risk management and managing things without talking about COVID. It's a risk that we thought would be a little one. And of course, it's turned out to be an absolutely enormous thing for the whole world. And countless examples of things that we thought would be well managed with PPE and respirators, etc., that we ended up finding this in the UK, but also in other countries being let down. And what we've also uncovered, as many of you will be aware, is in a number of advanced economies, the cure has actually created its own problems. So lockdowns and other measures to kind of manage COVID have actually paradoxically created problems themselves. So, you know, if you want a giant lesson in risk management and things that can go wrong, with a notable exception of some countries like Korea and other countries in Asia, New Zealand, COVID is unfortunately one of those examples.
It was also very interesting, James, in the World Economic Forum meetings in Davos for the last few years. I don't know whether we talked a bit about this before, but they produce, I don't think this year they are, but they produce a risk report every year, which is a really interesting thing to read, whatever organization you work for. And although it goes to many, many, many pages, the introductions are really enlightening. And what they've got is a really good, interesting color coding of what they believe some of the key risks are. And you can look at a glance what the leading economists and organizations feel are going to be happening. And something like a pandemic has been on their radar now for about 10 years, always about the sort of second, third or fourth key risk. But no one ever presumed that this could hit the world as much. So here we are, this was always in sight, but no one ever planned for it. Maybe it went in the too difficult box, I don't know, but it's not that it was a sudden surprise to everyone. And if you work in science or epidemiology, people have half predicted this years ago, but for some reason, these sort of risk management models failed and these weren't actually worked on. So, you know, what you're saying, James, is really, really interesting and relevant, I think. Yeah.
We'll talk about this maybe later, but it's that we're talking, making this video the day after Thanksgiving Day. And, you know, the turkey during January and March and June, nothing's happened. So the turkey's thinking, well, there's no problem. And of course, you come to Thanksgiving or just before Christmas time or whatever, and suddenly it's not a good idea. So I do agree with you, Martin. There's something rather interesting in the psychology that because something hasn't happened for a long time, people get this strange feeling that it's not going to happen in the future.
Right. That's right. I think so.
So, Martin, talk us through some of the basics around the way risk management can work.
Okay, really, we've touched on already, really. If we start at the top, if you like, with this little diagram, what are the new threats and opportunities we're all facing, as James just talked about? You know, following the pandemic or in the middle of the pandemic, additional threats have arisen, but also, funnily enough, additional opportunities. So although a lot of businesses have been very badly hit, there's also a lot of new businesses that have thought of a great way of actually filling the gap. You only have to think of this sort of technology we're on now, which has suddenly been a lifesaver. So there's new threats and indeed opportunities, and we really need to assess the future threats and risks and what's going to happen in the future. And then everyone's talking about the new normal, but in many ways, the new normal is the same all the way now, because every year, even irrelevant to the pandemic, new things are happening in the world of technology, employment, climate change, etc., which affect the way that all of us do what we're supposed to be doing in business. So assessing these threats and risks to be something as part of every organization's radar, even if you're a very, very small business or small charity. Once you've assessed these things, really it's important to decide what to do. And this is really the difficult bit. Maybe anyone can do a list of what could be happening, but what does that actually mean to your operation, to your business, to your function, to your department? And what are you actually going to do about it? And it's all very well thinking about what you're going to do, but actually doing it is the key issue. So what actions are you going to implement on the basis of the sort of the analysis, the review and the discussions you've had to ensure you're mitigating the risk or developing actually the opportunity? And then what often goes wrong in many organizations, these are brilliant ideas and brilliant plans, but nothing ever happens. And particularly in the UK, people have read about the review that was undertaken in 2016, I think it was, which what would happen if there was a pandemic in the UK. Detailed analysis was carried out, detailed reports were carried out, and the prognosis was terrible, but that was never implemented. There was no progress against, as James was talking about before, getting PPE, strengthening the NHS, etc. So this progress action is so important. Otherwise, you get a false complacency that things are going to be okay. And then more importantly, what haven't you done? What extra steps do you need to take to ensure you've got a resilient response? And this is the responsibility of everyone in an organization, not just people who've got sort of risk or manager in their job title. So that's what I feel, James, is the sort of the cycle of the process we need to all be following, actually.
Brilliant, fantastic. And if we just talk about a couple of the kind of the nuances on this, and Martin's already talked about this, there is a question of who's looking out for the new risks. So if you think about COVID, in January and February, who was paying attention to what was going on in China and saying, I wonder if that's going to make its way to the UK? And then who are they telling? I mean, I think from early February, there were actions starting to take place in the UK. We can debate whether they were enough. But this is an important general question. Who's covering that base and who are they telling about what they're seeing or that might be happening? In relation to assessing the threats that Martin's talked about, I think one thing I would say is which of these risks matter the most is a critical thing in the assessment. And I've written reasonable worst case. And it's the idea that if we think about, say, the risk of a fraud or something like that, there is a possibility that there could be a fraud of €1,000 or £1,000. But there is also a possibility that there could be a fraud of €1 million or £1 million. And one of the important areas to just be aware of is the relationship between the impact and the probability. And if all you're worrying about is the €1,000 or the €100 fraud, you may not think it's a big problem, but actually frauds can be much bigger than that. So there is something quite important about impact and likelihood.
There's also, I think, the knock-on risk as well, because following the financial risk could lead to a reputational risk, reputational damage, effect on employees, etc. So, and I think it's always the knock-on risk because it's equally important potentially as well.
That's a great point. In other words, if a criminal realizes that they can steal €1,000 from you, they may be more likely to try to steal €20,000. You get a reputation.
Right.
On this issue of deciding what to do, the kind of famous things that you may hear of is that you're going to take action, so treat the risk, you're going to terminate, you're going to stop doing something, you're going to transfer the risk, maybe take out insurance. And then one of the other things is you're just going to say, I'm going to live with that risk. I'm going to tolerate that risk. And we do this as business people all the time. And this, in kind of technical terms, is called the risk appetite, where you basically say, actually, I think that's enough for the moment. And I can't stress enough that issues about have people decide, oh, that's enough for now, called risk appetite is a really important thing to pay attention to when you're thinking about how to manage a business. And one of the issues here is actually how explicit people are being about their decisions to just that's enough, because sometimes that's not so clear.
And also having that debate is so important, and it doesn't just come out of the ether, it's a proper structured debate and discussion. I agree with you.
Yeah, in fact, we'll come on to this later about roles and so on. As Martin said, it's one thing to decide to do something, but it's another thing entirely to actually keep track of whether it's happening. And the famous phrases are the key performance indicators that mean that you're going to make your way towards your targets. But in technical terms, we would say the key risk indicators. What are the red flags or other warning signs that we've got to tell us that actually we might be going off track? And then finally, this business, as Martin was already talking about, of the, okay, here's where we are now. Are we just staying where we are, or do we need to do something different? Have things changed? And again, a vitally important thing is to recognize that the environment can change, your organization can change. For example, somebody can leave. So something was being managed well, and now they've gone. So this issue of keeping up with things changing in order to kind of keep things managed is really, really important. Yeah, anything else on this little extra nuances on the basics of risk management, Martin?
Yeah.
Okay.
Yep.
So we thought we'd quickly run through some of the basics that we would expect. Martin, we're going to talk about processes, etc.
Yeah, so in any business and in any operation, really, one needs to have a totally clear process of what we're trying to do from source to action. And whether that's in a particular local business unit, in a local branch maybe, or central operation, like maybe a business center where there's a combination of activities, or large businesses, you need a process which flows through on the actions to be taken from beginning to end, with checkpoints there. And this obviously the key element here is what people are actually doing, and how the process is running. So having a clear process map, if you like, and a logic is really critical in any operation.
And, you know, if you're smaller, Martin, you and I talked about this earlier, you know, this clear process could be no more complicated than a checklist if you're a small organization. But the idea, there is something that is saying, for this thing, this is what we need to do. And there's no ambiguity about what the this is.
Yeah, so people are consistent with what they're doing, and there's a structure and a method in what we're doing. And this applies to everything we do. Yeah, absolutely.
And a comment on policies, Martin?
Again, policies are very important because we need the structure so people are clear on what they're attempting to do. And this policy obviously would come from the most senior person in the organization, or the branch manager, or the senior manager, so that people could understand what the organization is trying to achieve. And that could be a tiny little organization or indeed a huge one. But obviously the policies in a small organization are significantly much more briefer than a major conglomerate. Yeah.
Yeah, you get a lot nowadays, you know, what's your policy on data protection to comply with that GDPR?
That's right.
And again, I would say, based on my experience, you know, yes, it's nice to have 10 pages of closely typed script, but what's the one-page version that makes what's really required crystal clear? And there is a further issue about the kind of follow-up of how do you communicate and train, etc., people in relation to these policies.
No, I think you raise a very good point, James. I mean, policy documents are great, but how many people actually spend time reading policies? And really the summary for the individual person working or doing that job is so important, and actually focusing on that particular role or function is really key, because most people don't read policy documents from end to end. So I think your comment about having a simple version and a simple action list is really critical. So if you like, it's a translation of the policy to make it a practical guideline. And I think that's a great idea.
And there's a little wrinkle that we'll come on to later, but it's worth touching upon now. And the wrinkle is this. You sometimes get a situation where people say, you know, the process is not up to date, the documentation, the policy is not up to date, but it doesn't really matter. And I think it depends what it is. But I think for organizations, if you can't even keep a checklist, for example, up to date, then you really do risk, and we're talking about managing risks here, the possibility that actually people are managing the old problem or in the old way rather than the new problem. So often when people say, oh, the paperwork's not up to date, if it's something really fundamental, like, well, what is our process or what is our policy? I'm not so sure this is just some minor little detail. I think this is quite central to a well-run business.
I think you're absolutely right. And there's an awful lot of focus really in developing something new, whether it's a policy or a procedure or an action list, but there's not so much attention in updating it. And I think in my experience, that's always something that's missing. So there's always the tick box. Yes, we've done it. It's on the shelf. It's on the internet. It must be fine. But in the last year, 18 months, how much has that changed from external factors? Do we need to review it? And I think that action goes in either the too difficult box or the not being bothered box, which I think is really sad, because immediately the whole structure collapses a bit. Yeah, I agree with you, James.
You know, it's a bit like, you know, if you've got a ship or whatever, would you ever have a situation where you don't have an up-to-date plan of the different compartments in the ship?
Correct.
You need to know whether there's a cupboard there and a door there, because it could be a difference between life or death.
Correct. I totally agree with you.
So this is not a short quote from Star Wars R2A2, but it's something that I heard elsewhere from a client, and I love it. And this issue R2A2 comes from the idea that when it goes well, I did it. And when it goes badly, oh, that's somebody else's fault. And what we're talking about here in organizational terms is clarity of roles and responsibilities, that's the R2, and clarity of the authorities and the approvals, that's the A2. And this is kind of, I can't stress enough how important this is, because in theory, people may have things in their job description, but when you look in the detail of what's going on, what you sometimes find is there's a confusion at an operational level as to whose role it is to do this and whose responsibility it is to do that and who can approve this thing. So one sign, obviously, if you're a larger organization, is to have some way of mapping out the who does what. And in fact, in the process diagram a little bit earlier, you had the different steps of the process, but you also had the different departments that do that. That's called a swim lane. The other famous technique is called RACI. But I can't stress enough, if you have a situation where people say, oh, I'm sure that's somebody else, you have to kind of pay attention. Are they sure, the other person, that they've got to do this? Do they think you're going to do it? And it's the same thing with the authorities and the approvals. The kind of well-known thing is the delegation of authority. This can be things like who's got access to the bank and can make a payment, who can approve a purchase order, etc. This again is a stupid little detail, but the importance of that being clear and up to date. What happens when people are ill? Who stands in for them? Because again, that can generate problems and risks. So it's amazing. It's such a basic thing, but the number of times when people think that the roles and responsibilities and the accountabilities are clear, but then in the weeds, actually, there is a lack of clarity. And I can't stress enough, in terms of what would be basics that we'd always ask people to think about, it would definitely be getting R2A2 right. Any reflections, Martin?
Yeah, I think it's very interesting. I mean, we talked about some of the strategic things that we've seen in the newspapers and social media, things going wrong. This is where it goes wrong, actually. And there's lots of things mentioned about if the strategy was wrong, the policy wrong. No, it probably wasn't. When it got to this detail, we weren't managing the things that really mattered at this level. And even if there's a government review or an organizational review, these things are often aren't focused on properly. And in my experience, and I'm sure it's yours, James, this is where the big things go wrong. It's not necessarily the strategy was wrong or the project was wrong. It's the implementation that went wrong. And actually delving into the micro is really important when you're looking at successful things as well. So yeah, I can't emphasize enough these things, which are the same whether you're in a very small business or a huge business, actually.
I had a client who had a problem, and when we were looking at why the problem was as bad as it was, it turned out there were 4 different people who had a partial responsibility for the area that went wrong. And one of our reflections was, it was the fact that there were so many people.
Yeah.
It wasn't 1 or 2, it was 4 that was probably partly to blame for what went wrong, because it allowed everybody to kind of get that kind of, well, the rest of them will sort it out.
Yeah, that's very interesting. But also the psychology as well of someone more senior saying how things are going is often not the right question to ask. It's actually, could you explain to me what's happening there? How are we doing these things? And I think it's also the false reassurance by the wrong question when you're looking at things like this. Yeah.
Brilliant. Martin, let's talk a little bit about SMART, both in terms of targets and managing risks.
Okay, so it's really, really important that in any operation that your targets and risk management are SMART. And I'm sure everyone's familiar with the SMART topology, which is really something that's got to be specific. So it's clearly defined so people understand it. In some way, you need to be able to measure it financially, qualitatively, quantitatively. Is this target actually achievable? There's no point setting a target which no one's going to achieve. So really, when you set a target of anything, the person who's receiving the target needs to appreciate it, but also agree to it in some way. Otherwise, the chance of it actually being achieved is much, much lower. Is this target and management actually relevant to what we're talking about? And is there any time attached to it? So all these things need to be SMART driven. And if they're not, they either won't be achieved or you won't achieve the maximum advantage from these things as well. So always focusing on these things are very important. And this sort of thing has been around for years, but so many organizations don't think of actions in a SMART term, if you like. So, and I come across things all the time still, even if you don't use SMART, where people fail particularly due to the time bound thing. Yeah, the targets are great, they might be achievable, but when are we doing it? Is it this year, next year, or the year after? Oh, well, when we do it. So it'll probably never ever be achieved, to be honest. So I think these things are so important, actually, particularly in the time of potential crisis, which currently, most businesses are now in, to a greater or lesser extent, I think.
I think the interesting thing with SMART is the roles and accountabilities is picked up by that relevant thing. But I would, again, if you think about what's the right question to ask, whether you're a staff member or a more senior manager, I think the issue of, so how often do I need to do that? That's if you've got the task. Or if you're a more senior person and you want to know how something's being managed, is it clear and explicit how often this gets done? Because it's so easy to say, and is that happening? And as Martin said, people go, oh yeah, that's happening. But it's a slightly different and better question to say, have we agreed the frequency of how often this is done? Because that's when you might find, actually, there's a bit of an ambiguity about whether this is checked on a daily basis, a weekly basis, a monthly basis, or if you're not careful, never.
Yeah, I agree with you, James. I'm particularly asking a dumb question, and not that I run a training course now to ask dumb questions, but it's always great to ask the obvious question, because the obvious question is the thing that needs to be answered, really, rather than the sort of clever question. And I think that's the case for anyone in any sort of organization, really. Ask the question that you think is a stupid question, because most people will want to ask the same thing, but they're too frightened to ask it, which I think is quite sad.
Brilliant. So what Martin's highlighted is that this idea of smart targets or smart actions to manage risks, which we've been talking about, really gets us into a place that you might call is about controlling things. And we wanted to talk about this word. This word control is used a lot in risk and compliance and audit circles, can sometimes be a little bit frightening. And basically, it's something that we put in place to manage a risk to the appropriate degree. It is the process with the actions and the checks and balances. It could be a computer system. It could be measures, information to tell us how we're doing. And I've got a good friend of mine who's got this way of looking at control. He said, you know, there is the whole business about to control things, which is very much the kind of heavy negative end of things. And then there's the being in control, okay, which is a much more desirable thing. And the kind of famous quote is, you know, why do cars have brakes? It's to make them go faster. So if you hear the word control, I guess one of my messages to all of you would be, is, you know, there's a negative version of this, but there's also a control is a thing, some of the things we've already talked about, and we'll talk more in a minute, to help us get to where we want to get to.
I think the positive point you make is really important, because lots of organizations that I've come across decide that controls are unimportant. On what basis they made that decision. And as you say quite rightly, a control is enabling us to achieve our success, our strategy in the business, not to hold the business back. And in a period where there's cost cutting and delayering, often the controls are disappearing now. And this is exactly the time where we need controls in place, because there are going to be greater stresses and pressures on organizations financially. And so those controls, if you like, are achieving success, not stopping the business doing what they want to do. So I think the point you made, James, is really valuable, really valuable.
And I think for everybody listening to this and listening to you, because I totally agree with you, I think there's absolutely something about, you know, it's the don't throw the baby out with the bathwater. You know, in a context of trying to cost cut, the temptation to say, well, we won't do that for a while. Now, Martin and I are not saying, I know Martin very well, we're not saying retain all controls all the time, okay? There's definitely a judgment to be made about what's appropriate. But what we are saying is too often people make short-term decision to lose absolutely fundamental control when actually they're doing too much control in one area, not enough control in another, and that's bad for any business.
I agree with you, James, and it's done for the wrong reason. It's done to control costs, and it's that actually not controlling costs, it's actually increasing costs. And particularly both of us have come across the situation where whole layers of people who used to supervise and review have disappeared. At a stroke, oh yes, we managed to save that amount of cost, but actually where's the additional cost by the additional checks you need elsewhere? So I think that's a very interesting point, James.
So, Martin, share with us some other reflections about, you know, thinking about controls and how we should view that.
Okay, so not dropping down to too much detail, but you can have controls in place in any organisation to prevent something happening. So the controls which, for example, would prevent a fraud, to prevent a loss, to prevent a misdemeanor. You've also got detective controls, which are actually in place to identify things which are happening, and you're actually identifying things earlier to prevent them becoming a disaster. And you've also got controls in place which are correcting deficiencies, again, before issues take place. And what sort of controls are we talking about? Well, there's traditional manual controls where there's reviewing or checking by a supervisor or manager. And obviously in this age of technology and digital, it's those controls which are automatic checks carried out by a system, a procedure, artificial intelligence, etc. There's the whole concept of separation of duties or segregation of duties. And that just really means roles and responsibilities are split so that one person isn't responsible for the whole process. And we talked briefly early on about processes. So that process is broken down between different people. And this isn't because of a fraudulent reason. This is because people are human and human beings make mistakes. And the extent to which that one person can review or check or understand what someone else has done will reduce the opportunity of error later on. So the whole concept of segregation and separation of duties is really, really important. And again, in these economic times, the separation of duties, I understand, is getting much less now. So that more people are doing more of the process, which from a business point of view could result in greater risk. There's lots and lots of great models out there, and this we've got here showing you is a COSO model, which identifies how we can map controls between reporting, system, compliance, etc. And these sort of models are really interesting from a strategic level to see how we should look at a control system within an organization. So that gives a bit of an overview of the sort of things we're looking at, and obviously one can drop down into greater detail. But at a strategic level, these are the sort of things I think are important. And particularly, you've got enough controls in place to mitigate any risk of loss, but also, as James said earlier, enough controls to enable us to achieve what the business, the operation, the function is trying to achieve. So there's different levels of importance of controls within any business, actually.
And again, I think what we're hoping to communicate to anybody that's with us still on this recording is this idea of, you know, so in that area, are there both preventative controls to stop it going wrong and detective controls, as a straight question? So if my job is, and if you're a staff member, so if my job is to prevent it, is somebody else taking on a detective role? You know, is there an opportunity, as Martin said about, you know, human error, is there an opportunity to automate this? Are we automating it as much as we should be? You know, is there a way of making sure that we've got enough control, and equally not too much control? And again, these would be smarter questions if you're a board member and you're concerned about a particular area, or a senior manager, to ask, because professionals who are putting together policies and processes and procedures and so on should be thinking in these terms to make sure that something bad and big isn't going to happen.
So the whole control discipline is throughout that particular business. And we talked a bit earlier, James, about if you're talking about a corner shop, which I mentioned to you before when I used to run this sort of training some years ago. You talk about a corner shop, what are the controls in place? And you can automatically translate that to a bigger business. So, and that's where one actually should start. What are the controls to manage finance, to manage purchasing, sales, cash, etc., etc. And we can then translate that. So it's a very simple concept, but actually it's made to sound more difficult. It's basically how you're looking at the process to make sure the process works effectively. Thanks, James.
Okay, more basics that we would expect, Martin.
So we touched on a moment ago, the monitoring. To what extent is the work of some person looked at by someone else, and whether that's by a supervisor or someone, a peer, and you're monitoring to make sure things are working properly, but also identifying any early mistakes, any early difficulties, anything which doesn't actually work properly. If you look at moving down, is there some sort of trail within the system so we can actually look back in the final accounts, the final records, and actually trail back the information to the original source? And that's so important, whether you're an SME or a major business, that you've got a complete focus. And obviously nowadays, this is all through a computer system. And to what extent can you trail a transaction from beginning to end? And this obviously is what external auditors would do when they review a business, just to provide assurance that the source documentation is actually results are reflected in the final accounts. This whole point about a risk mindset is so important. Everyone's job, I think, is looking at risk in the business, even a small business, and the extent to which you run business, manage risk as part of what you normally do. And with risk with a small r, as well as a big R, really, and any information that's been produced by the system can always be retrieved. So as part of your risk business and business as usual, how can you actually prove the fact that the information is actually there on a timely basis? It's no good if you produce it months after the event, because you've got nothing to look at to manage the future. So that's a bit of a summary, I think, James, of some of the things I think we could talk about.
I think what's interesting, I mean, on the first one, the monitoring, I think the key thing here is just because you haven't heard anything bad happen does not mean it's okay. Yeah. So there has to be, at the management level of any organisation, an understanding that if they don't ask their staff about what's going on, the danger is the staff will forget about it. Yeah. So, and the other issue, it sounds a bit like an admin thing, you know, let's have an evidence trail and let's be able to get hold of things quickly. It's, you know, for some organisations, whether it's GDPR, anti-money laundering, if you can't find the evidence, genuinely that will itself be a problem with the regulator. So I'm all, and Martin likewise, we're all for, don't just cover your organisation in bureaucracy, don't litter it with paperwork. But by the same token, if you can't find that signed checklist on that particular day, or that document attached to another document, you can end up with so many further problems after the event trying to track down what you need to track down. So please, although this, what Martin said might sound a bit like an admin task, we don't mean anybody watching this to think that that's what it is. And then the other thing that Martin's emphasised, which I think is so good, which is see risk as part of business as usual, is things change so fast. Think about COVID, think about all sorts of issues, business lockdowns, etc. And if you're not thinking about the fact that because things have changed, things may need to change in terms of the way you're managing them, you'll get caught out. And it's one of the most well-known problems in risk management is people were waiting to review what they were going to do, you know, in a month's time for that meeting. And in the meantime, things have gone wrong.
That's right. But I think that's really important, but also focusing on what's important. But also when you're building some of these, involve the more junior people as well in the organisation, because they've also got a pretty good understanding of what happens at the front end as well. So it's really, everyone owns the problem, if you like, James, which I think is what you've emphasised as well. And so we all own it. Actually, we all own the whole process. And it's not just the senior manager and managers.
And again, you're highlighting a really, really important thing. You know, if you're asking, you know, so who's been consulted on that project, sorry, the project risk register or the new process or the new policy, have people who do their job at ground level engaged with this risk assessment or with this process or whatever. And if you don't do that, you can find that senior people are quite happy with what they've done, but actually somebody who actually lives in the real world, so to speak, is thinking there is no way that's practical for me on the ground. So it's a great point Martin's raising. Couple of other final things, you know, you can know that something needs to change. You can try to manage it. But when you look at good organisations, and again, as Martin said, there's a scale dimension to this, but the larger the organisation that you get, the more that there becomes an issue of how does the filtering work in the organisation? And what tends to happen is people see a problem and they feel, oh, I'm sure I can figure this out myself. And so they work on it whilst not telling other people that they're working on it because they're hoping it will go away. And a really healthy culture when it comes to risk management is to have a clear understanding, you know, if I'm working on this kind of issue and I think I've got it under control, but there's a possibility, perhaps even quite a small possibility, that it could go wrong, I'm going to tell people that this could go wrong so that they know about it. And the best organisations have this ability to discipline the upward flow of information so that not everybody from the board and the executive gets everything, but there isn't an ambiguity about who should know when about something. Because otherwise you get this tendency, oh, I'll figure it out myself, and then things blow up and people say, why didn't you tell me? Now, clearly there's a responsibility on management to not blow their top every time that they're told that something's being, is being, not going quite as planned. You only get this ability to communicate openly if senior management tolerates better to know this information earlier than to go crazy every time you get a problem and then create a culture of fear or closeness about things that are going wrong. Any reflections on this? Yeah, Martin, then I've got a final comment.
No, I think that's really good. If we go back to one of the earliest slides we've got about, disasters and not completing projects. I mean, I'm always amazed when reading newspapers and social media. Surely this should have been known about years before. This disaster didn't just happen. And even look at tragedies as well. People clearly knew about the problems. But as you said, James, it's really important to emphasize the culture must be there of people raising issues, concerns, worries earlier, because that would then mitigate any problem. But cultures in most organizations are just don't tell anyone, protect your job. It's a too difficult comment. This applies in big and small organizations. And always, I think the culture is the most important thing when you're looking at the subject of risk management and control. The fact that people are encouraged to raise issues, and this is not causing trouble, this is actually raising issues which could result in a problem later on. And behind all these things we talked about right at the beginning of the video, I think for years before, people knew things were happening. And I think that's really concerning. And there's corporate amnesia as well. People never share across sectors. People don't read newspapers, don't read social media. And the same things happen again and again. And the mitigation could be, if you see a problem, see an issue, raise it politely with someone up the line. So I've seen something very worrying. And I think it's really, really important. And I think that will be a solution in many ways for a lot of the problems we're seeing now in lots of these projects, a lot of these systems, a lot of these disasters, which come out years later, where there's an independent review or independent inquiry. And you think, well, you knew that at the time. Why didn't people address it? So I really sort of share what you've just been saying, James, that culture is really critical.
Or as you said, somebody knew it at the time. Yep. So somebody knew that something. So if you get a situation as a senior leader or a manager where you're basically presented with a fait accompli, we've now realised the project needs to go back 6 months or the project will be £1 million over budget. The issue of, we need to look at the preventative controls and the compensating controls, but also I want to know why I'm only finding out about this so late. And one aspect, to create this open culture that Martin's talking about is, do you have a clear framework for how things get reported? So I think Martin is absolutely right to emphasize the behavioral dimension to risk management, but the behavioral dimension to risk management is supported by helpful tools, helpful guidance, such as, this is when we want to hear about things, and we really do want to hear about this. And again, sometimes you'll find actually there is no clarity about how things should filter their way up the organisation.
Yeah.
And Martin talked about the kind of human error and the human factor early, and he talked about the benefits of automating controls, for example. If there's one kind of concluding remark, and we'll hear from Martin in a second, that I would give, it's never underestimate the human factor. Okay, that's the process that we've supposedly got, but what might be the issues around this process where things could go wrong? There are obvious things as well about many organisations have got dilemmas around budgets. They've got dilemmas around multiple and competing priorities. And how good is the organisation at saying, so, are there any particular pinch points or constraint areas that might hold us up? And very often you get this kind of weakest link in the chain problem. 95% of things are fine, but there's this silly little thing that we're waiting for, and actually everything else is being held up until that thing gets fixed. And there's quite a well-known expression from an academic called James Reason about the Swiss cheese example. These are the little cheeses with little holes in them. And it's the idea is that, you know, most things can be fine most of the time, but it's that little detail that can sometimes not be right. And you get this collection of little problems that creates a bigger problem. I call it the kind of hairline crack effect. And, you know, I can't stress enough, you can have all the policies and procedures in the world, but if you underestimate the kind of moving around the problem, and this has been a big issue with COVID, of course, you have people talking about the behavioral impact of the things, and that applies just as much to an organization. So are you as an organization talking about the behavioral and cultural risks? I think would be a key message we'd like to give.
Martin. James. Yeah, the only thing I'd add to that is behave as though the business you work for is your business. And so when you're looking at risks and controls, what would you be doing if it was the company or business that you were running? So it's not a shareholder's business, it's your business, but also share things as you would if it was your own business. And although businesses always operate in silos and departments, managing risks and controls is everyone's problem, because our future depends on that success of that particular entity. So working together and sharing, which is what we do in our own business, is a thing we should be doing in a larger business we work for. So that's all I'd really add, James, but it's a key to success, doing this properly, I think. Yeah.
Well, look, Martin, it's been an absolute pleasure to talk to you again. We're keen, the two of us, to share knowledge. People can get in touch with you via me at my website. You and I have already done some internal audit and other risk-related videos which are available on YouTube. The details are there. There's some other topics. So look, without further ado, Martin, thank you so much for joining me again and sharing your extensive knowledge.
You're welcome. Thanks very much, James. Nice to see you again. Take care.
Thank you.
Cheers.